Hello. Welcome to the Mychal Raynes channel. I'm Mychal Raynes. Today's video I'd like to talk about oil investing in 2018 and the oil price in 2018. You know, I've been an oil investor since 2003. I've looked at the market seriously since then, and currently I'm still an oil investor. And the biggest reason that I am is because I own a vehicle. So if gas prices rise, and I'm crying at the pump, I'd at least like to be smiling at the bank. So I treat it kind of like a hedge for gasoline, but it's a lot more than that. You know, people approach me and they'll say, you know, Mychal, what's a good investment to get into? And I always recommend, you know, the index fund, especially if they're new or whatever. But, you know, folks that want to take it beyond that, really a good place that I can't think of a better place to start is in the oil sector. You know, not only if they drive a car is this a good hedge for them, but it does a lot for you as an investor. You know, it's a great first investment. It teaches you a ton of things. It teaches you about the economy. It teaches you about commodities. Let's say you're in a large, you know, oil producer that pays a dividend, and you start learning about dividends. Maybe you fall in love with dividend stocks or commodities, or there's a lot of geopolitical things tied to oil. So maybe you get into the geopolitics and world situations. Another thing that, you know, is nice about investing in oil is the numbers are pretty straightforward, right? It's not like investing in, say, you know, say a Facebook or a startup or a restaurant chain where you're hoping that they build locations or catch on. You know, it's pretty much caught on. It's in plastics, it's asphalt, it's gasoline, it's diesel, it's all around us. It's products in your house, they make clothing out of it, like, you know, polyester and things of that nature. So oil's pretty much here on the scene, and when you're analyzing a company, the numbers are really straightforward. So I think you can start looking at balance sheets and understanding things. You can start understanding how geopolitical risks of, you know, that's going on in the world, how it affects the markets and how it affects your investment. Another thing, oil's a little bit cyclical, so you can learn, you know, booms and busts out of it without getting completely wiped out. You can teach yourself what kind of investor you actually are. You know, if you get involved with an oil stock, let's say, and it does take a downturn, you know, you might learn that you don't have the stomach for this kind of thing, and you should stick to ETFs, mutual funds, indexes. You know, so it's gonna be like a good indicator of who you are as a person. And you can learn a little bit even about sentiment, you know, with backwardization, contango, on and on. We can go all day about the advantages to investing in oil, you know, rig counts, you know, whatever. But the fact is it offers a little bit of something for everybody, protects you if you drive a vehicle. You know, let's say, you know, gas price doubles and your oil stock's doing well, and, you know, maybe you're crying a little bit at the pump, but you're smiling at the bank. So you do get that hedge in there. So it's a great starting point, and it could go as deep. You can make a career in a lot of different things, just in the energy. You know, you could become an expert in a lot of different areas. You get all of that exposure in just one investment. It's not one-dimensional. So that's really awesome. Actually make you a better investor. Now, where is the oil price headed in 2018? You know, I could sit here and just throw out a number like 58. You know, that help you? Or do you even trust that? Like, why would you even trust that? Or how would I know? What would I look at to know that? I think to add value to this, a better thing would be how I see oil in 2018, where we're at and where we're headed. So currently we're around $65. To me, it appears we're in a situation where oil is trapped between $50 and $90. If we start getting above $90, I think a lot of the oil shale comes online. and OPEC that has voluntarily cut production can ramp up production. So, it would surprise me long term to see an oil price above $90. Now, a price under $50 would be just as surprising, because it would mean, we're probably in a full-fledged recession. So I'm looking for anything between 50 and 90 doesn't bother me as much. But if we're above 90, what I want to do is I want to see, is this a demand thing that's driving this price? Or maybe I look at gold and silver to kind of confirm that we might be experiencing some inflation. And typically, like, let's say a scenario like that happens. The Fed has admitted that they were going to raise rates this year 3 times. We have a new Fed chairman coming up, and he might be a yes man for the current administration. So they don't want to break the economy. If the Fed raises rates too much, you can see them kickstart a recession. But if they don't raise rates enough and we see inflation, the inflation can become really problematic in the economy. So the Fed is kind of stuck between a rock and a hard place on this if we get up above 90. But I would say if we get up above 90, I would anticipate more rate hikes and the Fed to get a little more aggressive. And that could send the price alone, just that happening, could send the price below 50. If we get below 50 a barrel, I think companies start struggling. And I think these countries that are oil dependent, or these oil producing countries where that's the backbone of their economy, they really start to suffer. So what does it mean if we're below 50 a barrel? Well, we're probably in a recession. So, I'm kind of using this as an economic thermometer that's going to tell me what the economy is doing on the highs and lows of this thing. And it can do both. It could definitely touch both in the same year, or it could just kind of stay ho-hum and just stay where it's at. And if it's 90 and maybe there's geopolitical conflict and the stock market's still holding up, I don't anticipate the Fed giving us extra rate hikes. But it's really hard, it's hard to say. But I do have a plan above 90. If it's getting above 90, I might increase my position in cash, and I might increase my position in precious metals, because I believe that the inflation will help the precious metals, and in cash, especially if the Fed's getting aggressive here and doing extra rate hikes, then it could very well send us into a recession. And below 50, you would think, I'm going to really double down and put a lot into oil if we drop under 50 and it's a recession. But it's probably not the case. Not that I would sell any of my oil holdings. But what I think in a recession, what I like to do is use my cash and find the sector that's crashed the most, kind of sift through the wreckage and find survivors and invest there. That's the way I've always liked to play it. So, as you can see, this has a big economic impact, and it's something that I use to forecast the economy, and I make decisions off of that. It's a good economic indicator for me. And there's a lot of things when this starts happening that we need to keep our finger on the pulse on, and we're going to do that here on this channel. So if you like what you're hearing and you want to be kept up to speed on this, then feel free to subscribe, and that way you don't miss out on any kind of major news in the energy markets. And I hope this has been as fun for you watching this as it's been for me making this. And that's going to wrap us up for today, ladies and gentlemen.